Hello everybody, welcome to another video of What's Moving the Markets. Today we're going to talk about how on Friday the NASDAQ index sunk into a death cross for the first time in 2 years. For those of you who don't know what a death cross is, don't worry, we'll be talking about that. And we will also be talking about why we think the NASDAQ has sunk into a death cross. So that is going to be about the twin headwinds that the markets are facing. One with respect to the possible military action. There is none yet, and we're hoping that there isn't going to be any, but it is possibly on the cards. And of course, the policy tightening has been there on the cards for a while now with respect to the interest rates going up in the United States of America. Again, just a small disclaimer, as usual, this is a casual video series, and please do your own due diligence before taking your investment decisions. So the stock markets are facing twin headwinds, one from possible military action and the other from the policy tightening by the Federal Reserve. And we have been talking about this for a few weeks now, and the markets have been showing consecutive declines as per our expectations. The Dow Jones, the S&P 500 ended down for the fifth time, and the NASDAQ has now sank into a death cross. NASDAQ, for those of us who don't know, consists of technology stocks, and they've been at having a bull run for a number of months now. So the once high-flying tech stocks have been battered. And of course, primarily this is because of the expectations of higher interest rates. Plus, we now have the possible escalation of a military conflict, which is now making the bullish investors very anxious. Now, in this video, we'll be talking about what is a death cross, why investors are becoming bearish, so what could be the reasons, which is why the market is going down, and it has displayed a death cross. And in one of those reasons, we are going to talk more about a possible escalation in the conflict of Ukraine and what that could mean for the markets. And primarily the objective of this could be to help you understand how bad could it be, right? Is it like a really bad situation for global markets, or what exactly it could mean, just to get a little bit idea. And then of course, as always, some discussion on what we could do to safeguard ourselves. And this is again just going to be food for thought for you, and you need to do more research before taking any decisions. Now, what is a death cross? A death cross appears when the 50-day moving average crosses below the 200-day moving average. Now, also the opposite of this is called a golden cross, right? When the 50-day goes above the 200-day, that is called a golden cross. And when the 50-day, which you can see the purple one here, is going below and crossing the 200. So this is the 200-day and this is the 50-day. The purple one is the 50-day and the yellow one is the 200-day, as you can see here by the labels as well. And as the purple one is crossing below the 200-day, this is what is known as a death cross. The opposite, which you see over here, this is what you call a golden cross. And you can see when the golden cross was there, we have seen a nice bull run. So death cross possibly means that there could be a bear run, but then again you saw a death cross here as well, right? And then there was a golden cross immediately after that, just a week or two after that, and then you saw this big bull run. So it could be worrying, but then obviously we have to see how it plays out, right? It could be a signal for something much worse to come, but then again, we cannot just look at this one event in independence of anything else. We need to see what the possible reasons could be for this happening, and then we need to get into more details about those reasons and then keep up with the progress so that we can accordingly either prepare for a much bigger bearish move, or we could see this reversing as well. So what usually happens is, and why a lot of chart watchers or technical analysts watch this, is because this is possibly marking the spot where a shorter term correction morphs into a longer term downtrend. So this is a short term correction. I mean, this is just a short term correction that we have seen. But could this go down from here, or it will go back up? Now, in order to get more into the details of those two possibilities, we need to talk about why this could be happening, right? What are the reasons behind this? And of course, we see that there are two possible reasons, which is what we mean by the twin headwinds, right? One is of this possible military action on the cards, and then the other one is something that we have been talking about for a while, which is the increasing of interest rates and the reduction in money supply by the Federal Reserve. So for those of us who don't know about this, we've made a few videos. You can just go back to the past few weeks videos on the channel, and you will get enough information about what that could possibly mean and how to safeguard your portfolios possibly against that. But the current development about the concerns about the military conflict, now this is of course provoking the anxieties among bullish investors, and it's kind of adding fuel to the fire, and it's driving down the value in speculative and yield sensitive areas of the market. And because NASDAQ is primarily tech stocks, so these type of stocks which are more speculative in nature, because they constitute more growth than value, and they had been going up a lot. Some of them were overvalued even. Well, that is a matter of perspective, but one would say that from the average target price of analysts, they were overvalued, and hence they've been taking a much bigger hit. The Dow Jones or the S&P have not taken so much of hit as has NASDAQ, and this is something that we had talked about before it happened in our previous videos. So now with the latest developments in Ukraine, how this could potentially impact the global markets? Well, before I move on to global markets, when we talk about the Russian and Ukrainian assets or markets, they of course are going to naturally be expected to be hit the hardest if there is any impact, if there is any escalation, right? And with respect to global markets, well, to be optimistic, I don't think that there's going to be a very big impact, right? So what could be the impact? Well, the Black Sea region is one of the regions where there's a lot of flow of grain out of it, and you've got major exporters like Ukraine, Russia, Kazakhstan, and Romania that are shipping wheat out of this region. And if that gets disrupted, then we could see a hike in wheat prices. So wheat prices could go up, and if wheat prices go up, then of course that is going to further add to the already high food inflation that we have seen. And secondly, oil markets are expected to get affected as well, and JP Morgan has said that tensions could risk a material spike in oil prices. And JP Morgan also talked about how a $150 per barrel price could impact the global GDP, and what the impact would be on inflation. So again, I mean, it's just expected to further add fuel to the fire of inflation, which would result in higher interest rates. And that is something that we have been talking about, irrespective of this escalation of the conflict. So again, with respect to possibly safeguarding our portfolios against inflation, we have already talked about how you could add industrial metals and food commodities. So we've already talked about agricultural commodities that you can possibly add. And we have previously mentioned industrial metals such as palladium, and we had given some other examples like copper. Plus now, today, if you analyze what's going on with Brent or platinum, we had talked about platinum as well. That is one particular industrial metal you can consider. And then you've got safe havens like silver and gold that could possibly be increased in your portfolio percentages as well. Apart from that, where there's a lot of potential upside is the US bonds, treasury bonds, and one particular asset class would be TIPS. That could be extremely interesting, which is your inflation protected securities. So treasury inflation protected securities, and they will be a good asset class to have for both if there is a higher inflation and or if there is a escalation in the military situation in Ukraine. So, I mean, the best option that one could add to their portfolios to be better safe than sorry is treasury inflation protected securities. So that's all for today. As always, happy investing, and please do your due diligence before you take any investment decisions. Best of luck.